as we saw some pretty encouraging news from MIBOR on days on the market and months of inventory or absorption rate for Indianapolis. So it's exciting to see and exciting to tear it apart at a little more granular level and see what's happening where. So I'm excited for this month and for the next couple months to see what
Yeah, me
happens.
too. Me too. Not what I expected, I'll tell you that.
Yeah, for sure, for sure. Okay, so starting with the Indianapolis rental data for March 2026, average rental price 1681. That's actually up ever so slightly month over month, but just down a little bit from year over year. Days on the market a little higher than what I'd like to see. 65 days on the market. I
That's
was not
crazy.
expecting that, to be honest with you. That's a little higher than, well, it's a lot higher than what we have actually been seeing. And look, it's up 38% year over year, down slightly month over month, but I would have expected it to come down even more as we get kind of into the spring market.
That absolutely shocks me because that is so far from what we're experiencing personally. And this isn't just a hey, Red Door's doing better. This is sincere shock. Like we're doing much better than that. And not only that, this is March data, but we are approaching the spring season in March, and that completely surprises me.
It should be going down. And what's, I guess, going into the next data point is number of active homes is 1160. That's down 10% month over month. As you can see kind of in the bottom right graph, we'll go over that in a minute, but you can see the yellow line is 2026. Inventory is going down, which typically you're going to see days on the market go down as inventory goes down. So it's, again, it's contrasting information, but it is what it is. We just report the numbers as they are. But so inventory going down as we go into the busy season, that is a great place to be. Average price per square foot is $1.07. Again, this top half is for single family homes only. So not only do we do it on like a per city basis or a per suburb basis, we do single family homes. The next line down there is apartments. So the average rental price for an apartment is $11.90. There are 1,078 apartments, so a good amount, almost as many single family homes as apartments. And then the price per square foot on apartments is $1.42. Townhomes and condos, the average the average price is $16.95, which is interestingly almost right on par with single family homes. 66 days on the market, almost exactly the same. And there's 176 of those, so significantly less townhomes on the market. The bottom three graphs, you're going to take a look at the bottom left one is average rent price over time. And as you saw from last year, it's kind of in that light gray. That's pretty typical for the seasonality is where we see it kind of in the winter, it's going to be the lowest, and then in the spring and the summer. So we should see this, if it's kind of a normal year, we should start to see this average rental price tick up for the next few months until we peak in the middle of summer. So look for that to kind of head up over the next couple months. Average days on the market. This has been a little bit wild over the past couple of years. It has evened out a little bit. So we're at 65. We should start to see that hopefully trend down and get more towards that like 30 range as we hit the spring and summer cycle. That's what I would expect to see over the next few months. That's what we saw last year. That's what we should see hopefully this year. And the number of active homes, we kind of already touched on that. That's actually trending down as we go into the busy season. So that's great news if you're an investor. You want to see less homes on the market, less competition, especially as the market activity picks up. So that's a great trend to see.
Yeah, I always get giddy about these graphs down here because they're so fun to watch. And I try to keep myself under control here. But this average days on market, so you see where we compare to last year? So last year we were seeing around 60. We are trending in the right direction. But man, we are considerably higher days on market than we saw last year.
Way over the market. I mean,
Yeah.
like 40% almost. And like you said, we're seeing way better than that. We're in like the low 30s with our homes, and we're seeing a lot more activity. So it's curious what's going on there.
Exactly. So do you have any theories on that's kind of what I was asking. Give me some wild theories. Anything? What's causing that?
I don't. Stubborn landlords
Stubborn
sticking to the price. Could be.
Okay, that would speak to that reason, right? They've acquired property at a higher interest rate. They're trying to cash flow, so they're holding, right? I think I alluded to that point on the previous month market report, and you're probably right. That probably is a major contributing factor there. So they're getting probably even bad advice. If you're with other property management companies, they don't typically update their landlords as often as we do.
I mean, I got to tell you, from our own inventory, Chris, I keep a pretty close eye on our days on the market. It's something I look at like on a weekly basis, and I can tell you, we experience that with stubborn homeowners who can't or don't want to reduce their price. We're giving them feedback. Hey, we're not getting the showings. We're not getting the activity that we need to see. We really need to reduce the price. And when they're reluctant to do it, there's like they sit there and their days on the market is higher and higher and higher, and the other ones churn and they rent faster. And so we see that with our own inventory of owners who can't or won't listen to our advice to make those necessary price reductions to get the activity. So I mean, if I got to believe that we're a pretty representative microcosm of what's going on the broader trend.
Completely agree. Yes, and I'm just going to finish this off. We'll move on to the sales data, but because we've gone this far into the services that Red Door provides, just so you know, so we are so proactive when it comes to informing our owners to make decisions that are going to affect the timeline or the days on market, because your days on market are a major impact on your overall ROI. These are weekly video updates in order to persuade our owners why it's necessary to make these quick reductions. And yes, not every owner is going to be persuaded to do so, no matter how much data you have to throw at them. But it is important to make those decisions quickly. And hopefully you're working with somebody who's able to do that in an effective way. Video format, again, is the most effective way that we have found to educate our owners on the necessities of making quick decisions based on real-time data. So, all right. I've beat that horse enough. Ready for sales?
Yeah, let's take a look at sales data.
All right, let's go. Here we go.
Boom. All right, I gotta give a shout out to the new design. Love the new design on the graphic or the market reports.
Good point.
We got a different color here, different look. I think it looks great. So shout out to Carlos is behind the scenes making all this happen. So I love it. I love it. We can easily see that this is sales data now. So
yeah.
Anyway.
Sorry, let me just jump on that. Carlos, we have Carlos in the glass room. He's our new production social media assistant here. Yes, I couldn't agree more. He has done a stellar job at these graphics. I come to expect a lot more to come in the future with when it comes to our ability to report in our engagement with audiences and social media alike. So yeah, well done, Carlos.
Okay, let's take a look at the sales data for Indy. Again, for all the sales data, not just for Indy. These are going to be for homes that are under $500,000. We've take a look at that because we believe that's more of what an investor point of view would do. So all these sales data is going to be under $500,000. So average sales price for Indianapolis, $243,068. Super affordable. If you're from California or Colorado, that is mind blowing to you how inexpensive that is. But that is actually slightly down month over month, of just 0.73%, and down, let's call it 1.5% year over year. Days on the market is 70 days on the market, which is the same as last month, but up 22% year over year. I was kind of expecting to see that a lot lower based on the graph that we just looked at in the economic update. So interesting. We'll keep an eye on that. Number of homes sold, 812. So again, we're looking at this from an investor point of view. There's a lot of homes under $500,000 that are selling, and 812 just goes to show you that there's tons of inventory, tons of affordable inventory. Actually, the one that I closed on was it was in Plainfield, and it was right about there. It was 240, 235, I can't remember, something like that. But again, super affordable. Price per square foot is $159 per square foot. And then we got the two graphs there at the bottom. Average sales price over time. The light gray line is last year, 2025. And then the red one is 2026. So we've obviously only got a couple months in 2026, but I expect to see something similar in terms of peaking kind of in the spring and the summer. And then maybe tapering off as we get into the winter. And then we got number of homes sold. This just takes you or lets you see real quick where the homes are selling at what price point. And here in Indianapolis, it's one of the more affordable areas that we report on. You can see there's tons of homes under $200,000. Look, this is last year, but there's 3,600 homes that sold under 200, and there's another 23 or 2,400 that sold under 250. And if I'm an investor, that's the price point I'm targeting. I would probably venture not in Indianapolis. I wouldn't really go above 250 if I could avoid it, and you can avoid it. So anyway, you can see very quickly that Indianapolis is a very affordable market. So honestly, the sales data is a little bit boring, but that's kind of good in a way.
What I see, and I feel like Mike is over there shaking his head like, oh, here we go again. Another experience from Chris to share. But no, this is important for people to hear. So investor conversations that I'm having right now, they are trying to find properties, and this is unusual, right? They're looking for properties that they can pick up for super low, that are super distressed properties. And I had three of them shared with me just as we've been sitting here chatting for me to run comps on. But they're looking for properties that are super distressed, and by that, to put a price point with that, we're looking at like $60,000 or $70,000 three
Wow.
bedroom, one bathroom type homes that a lot of these investors. What are your thoughts on those type of properties? Are those real opportunities? Do you think? And also, what I have found is that a lot of those type of opportunities, and they are kind of opportunities in my opinion, as long as you know what you're getting into, a lot of those are found on the east side of Indianapolis, which of course can be a hit or miss type area. What are your thoughts on investors looking for, as we're talking about price points to pick up properties?
I mean, to each their own. For me personally, that is a no-fly zone for me completely and totally. I think we've experienced that, Chris, over the number of years that you and I have worked together. That typically those are going to be, even after you rehab them, that's going to be a C-class property, and you're going to get a C-class renter in there, which I think so many people buy these investments and they look great on paper. Oh, I'm going to buy it for 60 or $70,000. I'll put 15 or 20 into it because it's a small home and you can basically rehab a whole house for 20 grand. Uh, and then, so you've got 80 into this thing. Oh, I'm going to rent it for whatever, 1,000, 1,200 bucks a month. Well, it doesn't always end up like that. You're going to have higher vacancy. You're going to have evictions. You're going to have theft. You're going to have squatters. There's a lot of things that don't go on that cute little spreadsheet that whoever's trying to sell you that house is going to show you as the pro forma. So I'm not a huge fan of those. I'm more of like a middle of the road, like B to A minus kind of an investor. I feel like that is in the long run going to provide me and or an investor a better ROI than these kind of like C class properties.
This is tremendous, tremendous education for these type of owners, because exactly, there are opportunities there, but it's not always as it appears to pencil out on paper. And there's two reasons. And if you've watched any of our podcasts, I beat these to death on everything, including my assessment of Mike's new Plainfield property when I was going through it to identify any rehab items on camera. But that's going to be your vacancy rate and your turnover costs. These are two, in my opinion, the biggest factors when it comes to your ROI. So if you're picking up properties, to wrap this up, you're picking up properties in a rough area that looks good on paper because it's super cheap, $60,000, $70,000, $80,000 property that you can turn around and turn it into a $150,000 home. The issue with that is if you're going to turn that into a long-term rental, it's going to sit considerably longer because your ability to identify a qualified tenant, you're going to have to go through 3-4 times as many applicants before you're able to identify. So that's your vacancy rate, right?
Yep.
And even once you do find someone who's qualified, your turnover costs on average for a property in this area are going to be much, much higher because your ability to secure a super high quality tenant is going to be topped out at a certain level. So
Yep.
so the way that they maintain the property is very likely to be less so in a B area. So that's my opinion on that.
100% agree.
All right, okay, that's Indianapolis Market Report. Let's get into our next one here.